to the Maryland Secondary Market Stability Act of 2025. Important information. You should drop off now if you do not consent to this part of the meeting being recorded. So I want to reiterate for everyone. Meredith, you can start the recording. All right, very good. Just to reiterate for the record, I welcome the work group members to this third meeting and the public, and informed everyone that these proceedings are being recorded, that anyone who continues in the virtual meeting has consented to the recording. We intend for the recording to be a record of the proceedings of the office staff, legislators, and public, so they can use, basically these will be the minutes. To everyone on the call, be sure to use the mute feature to avoid interference. Work group members, please raise your hand to be recognized. Well, good morning and Happy New Year to everybody. My name is Tony Salazar. I'm the Commissioner of Financial Regulation and by law, Chair of the work group. My designee is Deputy Commissioner for Financial Services and Consumer Protection, Kat Highland. Our office is the Office of Financial Regulation, which we typically refer to as OFR. OFR provides the administrative, legal, and fiscal services necessary for the work group's operations. And I want to thank everybody on our team that's worked hard in preparing for this meeting. We have had year end, we've had the start of the legislature, and now apparently there's some kind of something going around where we are all working remotely today, and we've had some downtime due to illness. So I apologize for that if we're a little thin today. I do want to welcome the public. Your interest in the process is appreciated. We have a dedicated page on our office's website with information about the work group and these meetings, including the dates and postings of our agendas. Unless otherwise noted, all the meetings are going to be on Google Meet. We've posted and publicized the meeting dates as required by law. And as our members know, OFR staff sends them a calendar invite with information before the meeting. The work group is authorized at 9 members. We are now at 8, so we still have a vacancy. Please, contact the governor's office, get them to get us our 9th member. We've been working on that. Because several members have back-to-back meetings today, we're going to skip going around the table with introductions, but we will have a short break, maybe an hour into the meeting. We'll see how it's going. As I said, we have a majority of our work group members present. So please introduce yourself as you speak, so for both staff and work group members. As a reminder, at our last meeting, a summary of which was sent to each of you and the video, which was made public, that's what we have. I'm not going to give a detailed recap of that meeting, but I will say that after that and after consideration of the comments received from group members, OFR submitted the interim report by December 31st, and that is available on the work group's webpage. In broad terms, our group's mission is to study and make recommendations about the existing licensing and registration systems for financial services providers. So launching into the agenda, we'll start out right now with the collection agency and licensing board. We spoke about them previously. We had 2 points to discuss that we heard some presentations on, which was allowing the commissioner to license collection agencies without need for board action. And hold on one moment here. Okay. I noticed that some folks have joined. We made an announcement at the beginning that this meeting was recorded, so I just want everyone who joins late to understand that the meeting is recorded, and if you stay on, that's your consent. So turning to the question I was talking about, we discussed in the last meeting allowing the commissioner to license a collection agencies without need for board approval, except, I was thinking about this, denials could be appealed to the board before going to the ALJ. As part of that, we would revise the board's enforcement authority, and that's where the board's primary responsibility would lie. And then we would loosen up the consumer member requirements. So that's kind of where we wanted to start out today. And I'm curious, call for any questions or, what are the thoughts of the work group members on those, on this area? quiet group today.
Tony, we can, I have 2 poll questions set up if you want to anonymously poll the work group members, kind of see where everybody's leaning, if that's helpful.
Yep, Ben.
Thank you, Commissioner. I would just like to say that when we were talking about the Collection Agency Licensing Board last time, we had discussed possibly looking into the history of the licensing board, the legislative history behind it. I just wanted to report that I have done some investigation of the legislative history behind the board, and wanted to note that the legislature has extended the life of the Collection Agency Licensing Board until 2032, and that was back in 2021. So that just suggests that the legislature thinks that it's an important body to continue, and so I just think that's something important to note. Thank you very much.
Yeah, thanks, Ben. We put in for that extension when it came up, and I agree. We did send around to all the board members. I hope you received it. I had, believe it was Ken or Emily. They pulled the legislative history on the board, and we provided that. I understood it was provided to all the board members, where you saw how the board. I believe there was a request from industry that the board, be established and set up the way it is. Nancy, I know you look like you wanted to say something. Is there anything?
So what I was going to add is this may be outside the realm of this question, but we have, the licensing board. We have Office of Financial Regulation, and then we have kind of the collection agency regulations, all kind of separate. And if there's a way to kind of join them together so it's not as disjointed as 2 different requirements, I think that would be helpful for the industry as well, because I think people don't always appreciate the fact that there are, separate substantive collection agency, debt collector type requirements, right? Separate from the licensing. That may be beyond the scope here, but I just thought I'd raise it as a point.
Sure. Well, I think that might be a little beyond the scope, although, it is somewhat integrated. And what we're talking about, though, is just the licensing piece. Yeah. Right. So if you go in, you do that. The board, it does have some regs, but it's mostly the fees and things. And then there's a separate statute which sets forth a lot of those collection pieces, and I think that's a little farther out than what we want to get into. We'd spend days talking about how to do that. These are somewhat simple. The other point was talking about removing the requirement that a consumer member of the board be an officer or director of a recognized consumer group in the state. So again, are there any thoughts or comments on that provision?
I mean, I'm going to share my own personal views that, I think it probably makes sense that to, consolidate, make things more efficient, that I would recommend licensing be with the OFR, right? It seems like we don't, for all the other licenses that we regulate, I don't know if there's necessarily a board.
Okay. Thank you.
Oh, you're welcome.
Yep. All right. Well, again, we can, I'm not hearing anything from anybody, so I guess, would there be, are people generally in favor of these 2 provisions, or is let's put it this way. Is there anybody who says, no, I don't want to do that? Because I'm trying to get some consensus here. And don't forget the plan going forward. Maybe I can take a step back, is we're going to, this month, then what we plan on doing is we have 2 meetings scheduled in February. We can either, if we get consensus, we can, issue interim. I think we can talk about issuing interim recommendations, or we can put these in our final report. So, I would like to get as much consensus as we can around moving forward. I don't want to have to come back to this topic if we don't have to, so we can move on and address the other ones in order, because I kind of think rationally that way. But that's what I have. Marceline, I see your hand up.
Yeah, good morning. Thanks, everybody. Just a quick question. I was just trying to understand with the licensing board and the collection agency, like how OFR addresses any potential conflicts of interest, like if a staff member has a connection with the collection agency or a potential licensee, like just in terms of like the recommendations and things, how does that interact?
Sure. Well, we're all covered by the state ethics rules. So none of us can participate in any activity in which we have an interest. So the state ethics rules would cover that.
Okay, thanks.
Yeah, I mean, in terms of collection agencies, in the 9 years I've been here, nobody's ever had an interest in a collection agency. Okay, I thought I saw Ken put a note in the chat there, so I appreciate that. Right, let me see. Okay, thanks, Ken. Okay, well, oh, man.
Actually, it is. Oh,
Yes. Did you want to hear from me, Commissioner?
Am I looking properly for Manuel?
I'm sorry, you're right. My hand was up. I apologize. I just wanted to clarify with the leaving sole licensing responsibility with the commissioner and maintaining joint enforcement authority between the commissioner and the board. Would there be any alteration of the board's current enforcement authority under the proposal as it's being conceived of, or would that just be the same enforcement authority, just removing the licensing responsibility?
No, well, again, all open, whatever people want. But I think last time we had a discussion about updating the board's authority, because that is, it's a little old. I think they're somewhat limited in that they have to give notice and things like that. And what we would propose is, as part of the recommendation, that the board's authority be, what would you call it, coterminous, whatever, equal to, the commissioner's authority and whatever the AG has. We all have, the ability to penalize up to $10,000, blah, 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 per penalty. So I would say that the board ought to have the same authority as the others. And that's open for discussion. We could leave it the same, but I think that hasn't been updated in decades. So it would seem to make sense that that be updated at the same time.
Thank you.
Yes, Ben.
so I actually had a question about the other proposal. So when it says removing the statutory requirement, is that being replaced with other language? Is it just the officer or member of the board requirement?
Yeah, I guess the thought is that we just remove the requirement that they be an officer or a member of a consumer group or a local consumer protection. I mean, the local consumer protection unit, 4, right? So you have a field of 4. If they say we don't want to do it, that's out. And then of a recognized consumer group, that involves different considerations, which may make it difficult for a board member to want to serve. We had a very hard time getting people last time, so this would open it up to members of the public. Now, suggestions could be somebody with some, I'm not sure, experience in collections or something, but no, the proposal is to open it up to a member of the public. Could make it a lawyer, huh? I like lawyers, right? So
Delighted, though I'm sure many lawyers would be to give their time to the work of the board.
Yeah.
I mean, my concern is just that if there's no language about what sort of person the consumer board members ought to be, then they could end up being anybody. They could end up being people who have some kind of industry connection. That's my only worry.
yeah, and so that's valid. I mean, we could try to add language that, puts a box around that, right? So that's a good point. No industry connection. And again, if there's consensus to go forward with that type of approach, we're not writing the statute, so I don't think we need to, put in the whatever. But we could say that the work group directionally thinks that this requirement needs to be addressed, loosened up, right? So long as protections are put in so that there's no conflict of interest and that the consumer member is a consumer member, not because there's already two industry members. So yeah, I totally agree with that. I think that's a good concern. We could put that in. Okay, unless you stay on mute. Okay, thank you, Meredith. So let me ask you all a question. Are you all, would you think there's consensus to go forward with us drafting up? I'll have staff draft up some proposals, language for the proposals for people to look at, and then we can have a final discussion at a future meeting. Is that an acceptable way to proceed?
I think that makes sense.
Okay. Ben, thank you. Others? Melissa, good morning.
Good morning. I think that makes sense too. I would feel better about that.
Okay. All right. Manuel's well. Okay. Thank you, Marceline. All right. Very good. Well, then that is how we will proceed. Thank you so much for that. And we can then move on. So appreciate that. Number two, let me see. Meredith, you've got that up there. Okay. Consumer loans and installment loans. You'll recall that we previously had some discussions regarding the statutory overlap and the need for clarity with respect to both of these. So we have some presenters on those two topics, and I'll start with those. Last time we heard from Jed Bellman, who is a former assistant commissioner and then moved over to private practice, and he had some comments on that. So today, these are the two statutes we're talking about, the consumer loan statute and the installment loan statute. And I think that we will then proceed.
Cliff was going to just give a quick overview of this slide.
Right.
Yeah. Okay. Cliff is our assistant commissioner, been with our office for a long time. Cliff, why don't you talk a little bit about the topic at hand?
Certainly. What we're looking at is that we have two different licenses under which non-mortgage loans to consumer borrowers can be made. We have our consumer loan law, our installment loan licensing laws. And I want to just go over those briefly with the two. With consumer loan law, this has a maximum loan size of $25,000. Write a loan under consumer loan law, maximum $25,000. The maximum interest rates, some of you may be aware, it's 33% on a balance of 1,000 or less. You get a blended rate between 1,000 and 2,000, 24% on the amount over 2,000, up to 25. A loan would default to consumer loan law if it's 25,000 or less, and the lender has not elected to govern that under a different statute. Important point is that a consumer loan is void and unenforceable if it's made by a person who's not licensed or exempt. Now, I mentioned other laws. We have interest and usury, which has no maximum loans, rates generally limited to 24%. Loans by unlicensed persons are void and unenforceable. Loans to a consumer would default to interest and usury. If it's over 25,000 and no other law has been elected, it could apply under 25,000 if a company or lender elects to put it under that law. Then we call our credit grantor provisions, which is the open-end credit and closed-end credit statutes. These were created some years ago to try to provide some simpler laws. However, we never took any of the other laws off the books. So now we've ended up with 4 different laws under which somebody can lend. There's no maximum amount. They're capped at 24%. They allow for some higher fees and charges if those are specified in the contract. For example, late charge amounts are not capped. They allow for higher interest on payments in default. A lender has to elect one of these laws for it to be governed by that law. Nothing other than shared appreciation mortgages would default to this statute. Somebody has to elect this. So giving it the fact that we have these 4 different lending laws, this relates to the actual licensing. So we have a consumer loan license, and that's required for a person who is making a loan under consumer loan law. We exempt any bank, trust company, savings bank, credit union, or savings and loan, period. It's $850 a year. To get the license, you have a basic character and fitness requirement, promoting the advantage of the community, and you must have at least $20,000 in liquid assets available. If you're licensed, you cannot sell a consumer loan to an unlicensed person. If it's acquired by an unlicensed person, the loan's not enforceable. Then we have the installment loan license. That is required for any loan that is made under the other 3 laws, interest and usury, or one of our 2 credit grantor laws. There are certain exemptions, one of them being anyone who holds a consumer loan license. So if you have a consumer loan license, you're exempt from installment loan licensure, and you can still make the loans under those various other statutes. We also exempt national banks, Maryland charter banks, credit unions, and S&L. Now, again, these are national or Maryland chartered. These are not necessarily other states. We exempt mortgage lender licensees or people who were exempt. It's not expressly stated, but other state banks chartered by other states that have a branch in Maryland are eligible to lend based on our banking laws. So they essentially get an exemption. A few others: employer lending to an employee, landlord lending to a tenant, educational institution lending for tuition and expenses if they're not for-profit degree granting schools. And other state banks that don't have a branch in Maryland, as I said, are not exempt. We are actually the only state with a requirement like that, by the way. Every other state exempts banks across the board. We are the only one that does not. The fee is the same as the consumer loan. The qualifications are the same because the installment loan statute refers to the consumer loan licensing statute for its licensing requirements. So they are identical. And so one of the topics we're considering is that, do we need to have 2 separate licenses? We added the credit grantors. We modernized some of the licensing, but didn't change the modernized the lending laws, but didn't change the licensing structures. Jed Bellman spoke, and he mentioned some confusion with Maryland's licensing statutes. I know some members of the working group asked if he had any statistics. He didn't have anything. I will give you one. We have a total of 100, and this was as of a few weeks ago, we had 166 consumer loan license holders in the state. Of those, 22, which is 13%, also have an installment loan license, despite the fact that the consumer loan license would exempt them from installment loan licensure. So that may be an indication that there is some confusion, as Jed had talked about, in our licensing structure. So that's the background on these two statutes and the licensing statutes.
All right, thanks, Cliff. Does anyone have any questions for Cliff before we have one more presenter?
This is Nancy. I do. Cliff, thank you for that. That was great. Can you tell, like, what is, I see the confusion and the concern with having to, but generally speaking, you know, the thought process is that you want to make sure that you have appropriate oversight over, you know, companies that are doing in the business in the state. Can you think of, is there a benefit of having these two overlapping statutes?
I honestly, as a regulator, I don't see it.
I didn't either. That's why I was asking.
That's my
what am I missing?
perspective.
I agree.
We
Okay.
basically have two different licenses that have the exact same qualifications. If you're qualified for consumer loan, you're qualified for installment loan. And you would be exempt. And yet we do have some companies getting both. I don't know why. Maybe it's an abundance of caution. They're just not clear. The qualifications are identical. So I personally don't see the benefit in having two separate licenses.
Yeah, we also have the confusion that we're the only state in the country that does not exempt out-of-state banks, despite the fact that we exempt all other banks, and that's caused some issues. So Ben,
yeah, I was going to ask that question next because I'm well aware that and it's like, generally speaking, the reason that you exempt somebody is because they're subject to oversight somewhere else, and the Maryland resources could be better served looking at companies that aren't subject to other oversight. So, you know, when you have an out-of-state chartered bank that may be subject to examination by the state banking regulator or, you know, FDIC or something like that, is that the best use of our resources?
Sure. Thank you. Ben?
Thank you, Commissioner, and thank you very much, Cliff, for that presentation. In terms of the licensing duplication, I wonder if it might be possible for the Commissioner, for example, to let licensees know if they're getting a duplicate license. I mean, it seems like for those, I think you said it was 16 licensees, maybe a notice could go out to them that they don't need both licenses. I think that it might be kind of throwing the baby out with the bathwater to talk about eliminating, you know, these two types of licenses that have developed over, you know, more than a century. I think the consumer loan law has a long history in Maryland. So I think that it might be a little extreme to just take one or both of these licensing provisions away. For example, I know that the consumer loan licensing provisions, and correct me if I'm wrong, but I believe that they have much stronger consumer protections than the installment loan licensing provisions. And for an installment loan, for somebody to lend under an installment loan, there has to be an agreement to that protocol. There has to be an election of whatever the non-consumer loan regime would apply. And so there has to be some consumer assent at that point. But if there's not that consumer assent, then it defaults to the consumer loan law with those robust consumer protections that have been, you know, again, I think it's the Price versus Murdy case from the Maryland Supreme Court goes over the long and important history of consumer protections represented by the Maryland consumer loan law licensing provisions in particular. So I think that's something that's really important to keep in mind. And the last thing I would say on the issue of the licensing of out-of-state banks that don't have a branch in the state, that particular issue presents something that is timely. We have, I think that there are rent-a-bank schemes where there are lenders that are engaged in associations with state chartered banks from out of state, where loans are purportedly originated by these state chartered banks and serviced by non-licensed financial entities. And so I think that's an example of where it's important to retain the installment loan licensing provisions for out-of-state banks that don't have a branch in this state, because they're not being subjected to any kind of regulatory oversight in Maryland. And the consumer loan law specifically recognizes, and this is something that was recognized very recently as a result of the Financial Consumer Protection Commission report, that the consumer loan law represents the fundamental public policy of Maryland. And that's why a loan that is not in compliance is void. And so this is not, this is a very important issue. The consumer loan law represents a really important policy in the state of Maryland, the fundamental policy of the state of Maryland. So thank you very much.
Well,
Yep,
Ben, and
Ben?
I would just answer that, we were not discussing any changes in the lending laws themselves. This is strictly the licensing regime. As far as who should be exempted, as Commissioner said earlier, we're not writing the legislation necessarily at this point. So there is still an opportunity, if this is done, to hash out precisely what exemptions might apply. And how that might be done. I think broadly the issue, or the broad proposal here, is to simply have a single license for the lending to consumer borrowers in the state of Maryland. That's really all it is. It doesn't necessarily preclude any further discussion on who should or should not be exempt to that. It is simply a matter of having only a single license to make loans under any of these statutes to consumer borrowers in the state of Maryland. And as we said,
Cliff,
right now, if you have the consumer, you're exempt from the installment anyway.
yeah, Cliff, let me recognize Chris Rawl.
Good.
Chris, good morning.
Good morning, Commissioner. I only wanted to weigh in to note that I can't think of any of our financial service clients that elect the consumer loan laws, their governing credit law these days, even with the higher rate structure. They're all electing Subtitle 10 or making loans under interest and usury. And I just wanted to mention that I don't think it's a very often used structure, and it does make sense to me to squish the licensing types together in some more streamlined way. To the point about the exemption for state chartered banks that are doing business elsewhere, I do agree that it is very strange that Maryland is the one holdout where a state chartered bank that is subject to supervision by federal regulators and a state banking regulator somewhere else needs a license here, but doesn't need a license in any of the other states. It is a strange thing. Just wanted to make those 2 points.
Sure. Let me just clarify a little confusion maybe with this topic. So I think Cliff, number one, Cliff clarified it very well. We're talking about how many pieces of paper do you need to do and how much money do you need to pay to do business in the state. What the thought is behind this is that you need one piece of paper and you pay one fee. Ben, I appreciate your comment about us sending a notice, and that's something I think we should consider. The issue, of course, is we never know what the other party is doing. So we can't, advise them, hey, you only need one license, because they may have, under the current system, they may require both. And we're not going to presume. That's their job. They talk with their attorneys, they file, and as long as they're doing that, we do that. So I hear you, but we could still do that. So that's a good comment. Number two, now another kind of piece is, let's not lose track of history here. In 1998, as Chris said, the lending laws were adjusted, right? So 10 and 11 were put in with the intent that lending be done under those, less so under the other ones because they were very confusing. And there was an attempt to rationalize the actual lending provisions. There was no mention of the licensing. That was a totally not covered, and I know that because I was part of those discussions back in the 90s. That licensing never came up. In terms of history, our office, the structure was affected because there used to be a commissioner of consumer credit and a bank commissioner, and those were all put together in our office under one commissioner, and that's the bank commissioner one out. The commissioner of consumer credit was subsumed into this office, and as were all the rules of consumer credit, they were all then merged under here. Licensing, however, again, was never looked at to see whether that should be rationalized. And so, the proposal is not from a substantive basis to change any of the consumer protections. This is simply a matter of making Maryland maybe a little easier to do business with in the state, which I think we all recognize is an important thing. I saw Manuel, you were next, and then I'll come to you, Ben, because you already had a chance.
Yeah, so actually I had a question about the so I had thought from Clifford's presentation that there wasn't actually any situation under which a company would require both of these licenses. But it sounds like maybe I have that wrong. So what would a company have to be doing that they would require both a consumer loan license and an installment loan license?
Emmanuel, I can't think of anything. The installment loan licensing provisions specifically exempt the holder of a consumer license from that. And yet we have some companies that do get both.
Yeah, I think it's a confusion factor. Ben?
Thank you, Commissioner. I wanted to again point out that the licensing provisions were specifically what was being considered in the Price versus Murdy case by the Supreme Court of Maryland. So that's an example of where the Supreme Court was talking about this licensing regime and the history of it and how that's developed. And so I think that's important to keep in mind, that this is not something that is just developed over a short period of time. It's developed over a long time. And to Chris's point, I agree. I think that entities that are electing whether to extend loans are going to elect the installment loan laws because those are less favorable to consumers and more favorable to the lender. But at least, and my point was, at least in that instance, the consumer also has to agree to that. And so there's a benefit to having the default of the consumer loan provisions. And it sounds like that there's really no need for confusion because any entity that wants to lend to consumers can get a consumer loan law license, and that covers everything, unless I'm misunderstanding.
It does currently. Again, the only issue, the only question, Ben, that you raised is the issue of out-of-state banks who do not need the consumer license, but would need the installment currently if they do not have a branch in the state of Maryland.
Sure. And Cliff, let me talk to that because Ben, what you referenced was that rent-a-bank scenario, right? Where these fintech companies, frankly, a lot of tribal lenders, they try to get together with other small institutions around the country that are struggling and they're looking for ways to make money. They're told, hey, we got this loan program that can help you out. And then they come in and they go out of state and they try to claim the bank exemption through interest rates, right? Our office put in a bill a couple of years ago. You guys can go back and look at it. It was what's known as the True Lender Law. So we had put in HB 254 back in 2024, and I'm sure you all saw that. That for whatever reason did not get any traction, and that bill was designed to address this very problem. So we are open to looking at that if there's an interest. That's obviously a separate topic, not really a licensing issue. But I think changing the licensing wouldn't really affect that, because the drivers of those are not the institutions themselves. It's the third parties that are working with them. And we would be happy to talk about legislation to fix that problem on a separate route.
But at least now they would be required to get an installment loan license. Even if the True Lender Act, didn't succeed, at least right now there is that requirement.
Yes.
Well, yes, if they opt to lend under those other statutes. I think what we see in reality, Ben, is that they don't make an election, so the loans default to consumer loan where they do not need a license. However, under the consumer
Well, that's a
loan
good
law,
point.
under consumer loan law, they cannot sell those loans, and very often in these rent-a-bank schemes, that other party buys the loans immediately afterwards. They must have a consumer loan license because they cannot buy the loan without that. As I mentioned, a loan made under consumer loan law is void and unenforceable if it's purchased by someone who was not licensed. So there is still protection in that respect.
Right. And so what we're trying to do, Ben and others, is like thread the needle, right? We want to see if we can come up with a way where Maryland is not perceived to be a difficult state to do business, at the same time, not diminishing in any way the existing consumer protections. So, I know you spoke substantively of those laws. I appreciate that. That is not on the table. We are looking at solely the licensing pieces of paper and see if we can, achieve that end. That's really what's behind this. Looks like Meredith has a hand up.
Yeah, just an administrative logistical reminder. We did invite Gretchen.
Oh yeah, let's have Gretchen speak.
To offer her question. Got a great background.
Oh, perfect. Let's do that. Sorry, Gretchen. I got all wrapped up. I'm supposed to keep this going here. So we are fortunate to have on our staff here as one of our enforcement attorneys, Gretchen Reimert, who many of you may know. She has a background in consumer finance and protection, and is now working with she's an attorney general working with our office. Gretchen, I'll turn it over to you.
So thank you so much for the invitation to speak today. And I think my comments dovetail perfectly off of the discussion that we've been having up to this point. When I introduced myself at the last meeting, mentioned that I am the newest addition to the Attorney General Enforcement Group that supports OFR. Before joining the state of Maryland, I worked primarily representing consumers and homeowners who were dealing with mortgage lending, foreclosure related issues. So I have most of my experience in kind of the consumer protection arena. And I also am sitting in a new chair at the table by now supporting OFR in their endeavors to ensure that people are properly licensed and behaving appropriately in the state of Maryland. I was asked to offer an opinion based on my consumer protection background about what confusion in the licensing scheme, how that impacts consumers and their advocates. And my answer to that question was, consumers do not care what license an entity has. Consumers only care that an entity is licensed and being properly monitored and regulated and behaving appropriately in the state of Maryland. Just to take a step back, the commissioner spoke earlier about OFR's mission, which is to protect Marylanders through the operation of a modern financial regulatory system that promotes respect for consumers, safety and compliance, fair competition, responsible business innovation, and a strong state economy. So everyone benefits when there is a traffic cop on the beat, when there is a watchdog that is monitoring the situation and taking action appropriately. And part of what we've talked about up to this point is there is a patchwork of statutes that were put in place to try to regulate a system that in the 21st century is evolving faster than almost anybody can keep up. And the question that I think OFR is asking is there a way to clarify the statutory scheme to make it easier for good actors to conduct business in the state of Maryland, and also make it easier for bad actors to be kept out, or if they sneak their way in, to be identified and removed. The general proposition for the state is if you are operating in our state and you are impacting our residents and our businesses, you need to be licensed, period. So the purpose of licensing is to ensure that the applicant has sufficient experience, character, financial responsibility, and general fitness to command the confidence of the public and warrant the belief that the business will be operated lawfully, honestly, fairly, and efficiently. I think there are a number of representatives on this work group that represent good actors in the industry who are trying to do things the right way. Cliff mentioned that there are roughly 24 actors that aren't sure which license to get, so they seem to be getting 2 to cover their bases. So we're less concerned. My exposure, I should say, is less to the good actors and more to the bad actors who are using confusion in the statute to fly under the radar screen. And in today, with the technology of today, it's very easy for a bad actor to do a lot of damage in a short period of time. So I don't really have answers. I mostly have questions. But I think the question that I would pose is, since we have a work group with a very broad mandate from the legislature, is there some low-hanging fruit? Is there some consensus? Is there a way for members to come together and make some suggestions that would not necessarily streamline the statute, but clarify ambiguity in the statute? Because clarity makes enforcement easier and more efficient. And at a time when the industry is evolving in ways that we can't keep up with, does OFR have the tools in its toolkit in a modern world to address products like fintech and that are impacted by AI and crypto, and some things we're seeing and some things we know are coming? So that's my general comment, and I'm happy to answer any questions about what I've said or that might relate to this topic.
Gretchen, thanks so much. That was, now you all see how blessed we are to have some good enforcement attorneys with our office. That was a very good explanation. And I like the way you framed it about clarifying maybe instead of streamlining. So, we're not wedded to, the proposal that we have one license or anything else. Gretchen's point was really well said, right? If we can clear up ambiguity, that's just as good, because again, she mentioned our mission statement, and part of that is to support the state of Maryland. And if we can thread that needle and make it easier and, more clear on how things are done, that's, where we want to go. Ben.
Thank you, Commissioner. I just wanted to thank you, Gretchen, for that presentation. That was fantastic. And maybe one area where clarification would be possible is on this issue of the duplicate licenses. I mean, that was brought up as a problem. I think it's been mentioned a couple of times. Perhaps there is a way that it can be part of, the overall licensing procedure, that there's a check for whether there's a duplicate license, and then we can just take care of that duplication right there. That seems like a fairly straightforward and easy way to address that issue.
Yep. So, in the interest of time, because again, we're not going to solve it. We're going to make a recommendation. What I propose we do is, as much as I hate to punt things along, I think today we have managed to get some good, good discussion going, and greater understanding of what we're looking at. And again, we're going to make a recommendation, right? So I'm going to ask that everybody kind of cogitate on what we've heard today, cogitate on the issues that we've seen, and think about how you'd feel if you have any thoughts on what you'd recommend the recommendation to the General Assembly be. Please send that in. Meredith is in receipt of all that. And then what we would do is maybe next month we can talk about a little more clarity, because I'm as the conversation has evolved, I think hopefully we can get some kind of consensus around the fact that we want to make sure that Maryland is a state where people feel they can come to do business. They understand the rules of the road. It appears that licensing of consumer lenders and installment lenders has created confusion. We're recommending to the legislature that they look at ways to either streamline or clarify ambiguities that are causing issues for people wanting to do this type of business in the state. And that's like the highest level. And then if we get into any more, we get into it. But my suggestion would be, think about that. We'll put it on the agenda for next month. Maybe we can kind of talk a little bit more about that. And then next month, if people are comfortable, we'll do what we did with the collection agency board, and we will, move to putting together a proposed recommendation for people to look at. All right, we are at 10:55. I know people have to leave, and we're going to move next into the topic. Ben, you were the proponent of the vehicle financing and auto loans. That is now you did the presentation last time. So what I propose is that's next on the agenda. We give that a hearing. I want to thank you for providing, our staff, making it easier for us to, kind of look at this and get information. So thanks a lot. That's great. Let's wait 5 minutes real quick till 11 o'clock. We'll come back. I'll turn it back over to you because I know you have more information to kick this off, and then we'll go into that. Just looking at our agenda for the day after that, we'll turn in. We've got some folks to speaking about third-party litigation and probate estate loans. We'll raise those topics, and then we're kind of rolling, right? So hopefully collection agency now off our thing. We're moving up the thing, litigation and financing and probate. We're going to hear about those. They'll come up to the agenda, and then we'll add new, and we'll kind of roll along. So see you in now 4 minutes. All right, everyone, welcome. It's now 11 o'clock. I know that was a short break, but like I said, we have folks with back-to-back meetings, so we are going to continue. Ben, before you go, in the better late than never category, I want to remind, I was reminded to tell the board members that now with the General Assembly in session, questions, you all may have questions about testifying um, in front of the General Assembly or interactions with General Assembly members. As members of the work group here in the department, Amy Hennon will send out a memo that the office has for all boards, commissions, advisory councils, work groups, and whatever, in terms of members and what the department expects. There's two categories. Number one, testifying in an official capacity. If you would like to testify in an official capacity on behalf of the work group, you need to obtain prior approval from the Office of the Secretary and the Governor's Legislative Office. There's a procedure for getting those approvals. You're responsible for your testimony and signing up and things like that, but it needs to be at least 5 business days in advance of the hearing. The memo will tell you about that. Number two, testifying in a personal capacity. You can testify, obviously, on privately sponsored legislation in a personal capacity, provided that you clearly state on the record before any testimony is offered that you are not testifying on behalf of the work group or the governor or the Department of Labor. And as a courtesy, the department asks that you testify, that you notify the department about your testimony there. And if you plan to testify on behalf of a departmental bill, that you give, again, the 5 days notice. And there's a memo from the department's legislative team that talks about that. And it also talks about communications with the General Assembly and what is expected there. So look out for that. That will be coming out shortly from either Amy or Meredith. And with that, Ben, I will turn it over to you so that we can start our discussion here on vehicle financing and auto loans and the potential for licensing in that field. I think you're on mute, Ben. Meredith, can you unmute Ben?
I can't. Only the person can unmute themselves, unfortunately.
Huh. There you go.
There you go.
Can you hear me now?
Perfect.
Okay. I apologize. I don't know what happened there. Okay. The vehicle financing and auto loans. This dovetails in with what we were discussing, the scope of licensing. Now, I just wanted to point out that this is not a new issue. This is something that the Maryland Financial Consumer
Uh-oh. We're having internet issues, Ben. I think you froze. Do you want to give a minute and try to log out and log back in? That sometimes corrects issues.
Yeah, I'll put something in the chat for him.
Okay. And I know I'll give him a minute to come back in. Is everybody else, can you maybe thumbs up or anything? Yeah, thanks, Ben. Good idea. Everybody else okay with their connectivity? If you're having issues, please try logging back out and logging back in. Yep. All right, Nancy, very good. All right. He's back.
I apologize. Can you hear me?
Yeah, loud and clear.
Great. I don't know what was going on there. I hope it doesn't happen again. So as I was saying, the vehicle financing auto loan licensing issue is not something that's new. It was proposed in the 2018 report of the Maryland Financial Consumer Protection Commission. That report recognized that currently exclusive authority for licensing of auto dealers rests with the MVA, even though motor vehicle dealers engage in financing transactions. And so this is not a new issue. The Financial Consumer Protection Commission recommended that auto dealers who are originating financing be required to get a license under the Financial Institutions article. And in fact, I believe that the recommendation was that a credit services business license be required. Now that license is something that includes a lot of disclosure requirements and other requirements that don't apply to other lenders. So it's a much more difficult statute to comply with than the typical licensing provisions. And so there were two efforts to enact those recommendations into law back in 2019 and 2020. Those were not successful. The simple effort to recommend that auto dealers that are engaged in originating financing be licensed hasn't been attempted. More recently, the FTC engaged in rulemaking over what's called the CARS rule. This is a report that I provided, I think that's been provided to the members of the work group back in 2024. Now, the rule was supposed to go into effect. It didn't actually go into effect because of procedural issues. There wasn't a substantive problem with the rule. It was just procedurally barred. But the work that went into that rule and the background behind it, I think, is very instructive, particularly given the work of the Maryland Financial Consumer Protection back in 2018. The CARS rule has a statement of basis and purpose that really acts as a factual record that I think is helpful to the work group. It explains the size of auto finance debt, how dealer arranged financing works, and how recurring issues at the origination of financing can be addressed. And so first, if you look at that CARS rule statement of basis and purpose, it talks about how auto finance is a major household debt category. This is not a niche problem. It's not a small part of the consumer debt issue. It's a huge part of the consumer debt issue, which, again, is relevant to whether the origination of this kind of debt should be subject to regulatory oversight. Vehicles are a major household expense. It's many consumers' largest expense, the report says, on par with housing, childcare, and food. So about 16% of median annual household income. Most vehicle purchases are financed. So more than 80% of new vehicle purchases and many used vehicle purchases are financed. These aren't cash sales, and I don't think that's a surprise. And as a result, auto finance debt is enormous. There's more than $1.5 trillion owned on auto loans, and it's the third largest source of U.S. consumer debt. And it's the statement of basis and purpose finds that service members, military service members, are especially exposed, and they could carry substantially higher auto debt than other citizens. And with the military installations in Maryland, that's something of particular concern to us in this state. The statement of basis and purpose also talks about the the function or the process of dealer arranged financing. And so when people are financing a vehicle, usually that vehicle gets financed through the dealer. Approximately 70% of consumers, according to the report, finance through a dealer using what's called indirect financing, but what is actually a transaction where the dealer is listed as the creditor on the contract, and then that contract is usually assigned right away to a third-party financing entity. So in other words, the dealer isn't carrying the debt for a long time, but the dealer is originating the debt and is listed as the creditor on the financing agreement. So in that process, dealers collect financial information, they distribute that to finance sources, and they then originate the contract as the creditor. You can see that on pages 11 to 13 of that report. They assign contracts to the third-party finance companies. And in fact, more than half of the profit, the average profit in a vehicle sale, is related to the financing portion of the transaction and not the sales portion of the transaction. And a lot of that has to do with the markup structure on the interest rate or the annual percentage rate. So the report describes how third-party financing sources will offer what's called a buy rate to the dealer, and then the dealer obtains compensation based on marking up the consumer's interest rate above what the third-party financing source would accept. And so there is a provision for the auto dealer to make money off of increasing the consumer's interest rate. And this has led to some issues. The finance office type transaction have led to some issues in Maryland. And there were a couple of cases that I believe were provided to the work group. The FTC, the Federal Trade Commission, pursued allegations against Passport dealership, and those allegations related to financing markup issues. There's also the Department of Justice press release in the guaranteed auto sales matter that related to requiring customers to pay larger down payments, minority customers to pay larger down payments than other customers. And those were both examples of federal enforcement, although federal enforcement may be waning in the current day. And so I think that the report reflects that this is a big issue, that there is a lot of money that's at play in the dealer arranged financing, and that there's not financial regulation, there's not financial oversight in Maryland, because right now licensing oversight rests exclusively with the MVA. And that oversight relates more to the sales part of the transaction than the financing part of the transaction. And financial licensing would just requiring a financial license under the Financial Institutions article would provide some baseline required records, investigative access, and enforcement supervision that would be helpful. So under the current law, licensees have to keep books and records the commissioner considers necessary, have to retain those required records for at least 2 years. That's very similar to what was contemplated under the CARS Act. COMAR requires ledger records for borrowers' loan accounts, separate files of papers for each loan account, and record keeping, and gives the commissioner investigatory authority so that the commissioner at the state level can investigate dealer financing practices to try to prevent the type of issues that that we saw in the 2 press releases that were provided. and also gives the commissioner cease and desist authority. And if this is just provided under the consumer loan law, the installment lenders would all sit under that same investigatory authority, because installment lenders are subject to the very same requirements as consumer lenders, as we previously discussed. So I think that those are some relevant materials to the question of whether it would be worthwhile to recommend that auto dealers get licensed. I think there's a fairly robust record, both within Maryland and on the federal level, suggesting that licensing and oversight is important. And so I guess I'd like to hand it off to John Van Alst, if I could, or back to the commissioner, but however the commissioner would like to proceed.
No, Ben, yep, we sent out some information advising the members that he'd be speaking. So if you want to do the intro, or if he wants to do his own intro to make it, move along, that's great. Thank you. Appreciate your presentation.
Sure. Thank you, Commissioner. Well, I'd like to introduce John Van Alst. He is a senior attorney with the National Consumer Law Center. And I very much appreciate that he's available to speak this morning. He's written, co-authored several treatises for NCLC, and is very well educated on the subject. So, John?
Thank you. And thank you to the group and Commissioner for the opportunity to talk on this really important topic today. It's something I've worked on for many years at NCLC in an effort to support legal aid offices and private attorneys in their efforts to protect low-income consumers in these car sales and finance transactions. And prior to that, with legal services in North Carolina. And I'm just so glad this group is looking at the possibility of licensure for car dealers that are acting in this capacity as creditors, to allow the office to protect Maryland residents and promote respect for consumers and really create fair competition in this very important marketplace. As Ben pointed out, cars are tremendously important. We see that they provide not only physical mobility, but economic mobility. It's actually currently the largest non-mortgage area of consumer debt in the United States. So outside of mortgages, this is the biggest currently. We'll see what happens with student loans in the future. But it also gets originated at a much higher rate. These roll over more frequently than we see with a lot of mortgages or student loans and things like that. And so that means there are more opportunities for abuse and fraud in the origination of these transactions. And they're often smaller dollar. That number, looking at the second largest source of consumer debt in the US, that's looking at dollar volume, but this affects a lot more consumers. And I'm really worried about the people. And so this affects a great deal of people who may never have a mortgage, or any of those other sorts of very important transactions. And these transactions are incredibly complex. There have been studies looking at this as more complex than, buying a home, planning for retirement, any of those things. The consumer in these transactions is simultaneously negotiating the price of the car, the cost of credit, the amount for the trade-in, the cost for add-ons. Many of these, they don't even realize they're negotiating these. They don't realize that the dealer has such discretion over the cost of credit or over the cost of the add-ons, all those sorts of things. So it is very complex, very difficult for consumers to really protect themselves in these transactions. And dealers do really play this central role in financing. That discretion that I mentioned really means that they oftentimes are in control of many of the terms that are going to be, placed upon the consumer in these transactions. I think one sort of analogous thing might help to look at is manufactured home dealers. A few years ago, the SAFE Act, a federal law, required that anyone engaging in the business of loan originator for home finance meet certain requirements, including licensing. And those protections, Maryland Office of Financial Regulation, implemented that and requires manufactured home dealers to exhibit a duty of good faith, and not to steer consumers to a particular source of financing, not to mislead them, all those sorts of things. It's a lot of the same problems that we saw in that marketplace that we see in terms of the auto finance. And indeed, that's another marketplace where a lot of the financing for homes that are titled as personal property rather than real property, at least used to and still sometimes do take place as retail installment sales contracts, much the same as these transactions where the dealer is the original creditor. So we have these dealers acting as creditors. And currently, consumers are confused oftentimes. These are complex transactions. They're also, it's really difficult for them to vindicate their rights. Unlike the mortgage marketplace, almost ubiquitous in these transactions are arbitration agreements. So consumers are often precluded from going to court to try to vindicate their rights in these transactions. And that makes it really difficult to address some of the abuses that Ben mentioned. We've seen just sort of horrible things that are the result of that dealer discretion. The dealer is sitting directly across from the consumer and sort of sizing them up. How much can I charge them for the add-on product? How much can I charge them for the interest rate on this? And they do have a lot of latitude in many of these transactions to sort of set those terms. And so consumers are oftentimes sort of ill prepared to address these sorts of things. There's also a huge lack of public data about these transactions. Unlike a lot of other finance transactions, especially thinking about the mortgage marketplace, things like that, most of the data in auto is proprietary. A lot of it comes from credit reporting agencies and things like that. The CFPB actually in 2023 or 2022 initiated an auto data pilot trying to get better information about what's going on in this important marketplace. That, of course, is now ended, but I think it really points out the need for a better understanding of what's going on. And oftentimes it's the dealer where this information that's so important can be discovered, about what's happening in these transactions. I'm going to try to keep my remarks brief because I'd love to hear more of the questions from the board, but I am just really so happy to think about the possibility of licensing dealers and what that might mean for consumers, but for the marketplace in general. I will say I've talked to dealers themselves over time who said, I would love to compete with other dealers on the price of the car. But when every other dealer up and down dealer row is making most of their money from selling financing rather than selling the car, I can't compete. And it makes the marketplace less transparent, less competitive, and it makes it less a robust marketplace, not just for consumers, but for dealers who really want to compete on selling cars.
John, thanks so much. Really appreciate it that you've taken the time and also for working in this area, because you're right, it is important for consumers. So let's open this up. We've had Ben's presentation last month. Now we got a little more information. We sent some out. Nancy, I see your hands up. We could have a little discussion here. You're on mute.
Sorry about that. John, thank you very much. And Ben as well. I do agree. It's an important topic. I'd be curious to know, so when you have most people, is my understanding, if you finance a car, it's not written as a promissory note, but rather written on retail installment, like third-party paper. And generally, then that paper is sold. And in most states, the licensing goes like under Sales Finance Company Act, so that you need a license to be a purchaser of that third-party paper. So I'm curious, in other states, how do you see the licensing of the, somebody who's issuing the retail installment sales contract, which is distinguishable from a loan per se, right?
So I'll just say it's an incredibly complex area. We were the discussion earlier today about two different sort of regimes under which consumer credit might be issued in Maryland. We see that sometimes in other states. We see different actors under different licensing sort of regimes. But it's inevitably sort of every state I see, it's an area that's oftentimes overlooked given its importance to consumers. And I think in some ways, if Maryland went about this in a thoughtful manner, it would be very helpful to better sort of address some of the holes that we see created. There's some dealers that do hold their own paper, the buy here, pay here dealers, and it varies state to state how those are being regulated as creditors. The fact that sometimes even the more traditional auto dealers that are going to assign the retail installment sales contract to a bank or credit union, a finance company, somebody like that, sometimes they wind up holding on to them for whatever reason. If they're the buyer refuses to buy it, or they try to have to look for another another assignee. And so things change, and a lot of times, if that winds up happening, we can see real holes develop if the reliance is entirely upon the assignee being licensed.
John,
No, I was just going to say
Nancy,
thank you for
quick
that.
question.
And I'm not suggesting that. I was just, my concern is that, and I'll just say it, that, if the group decides to license the dealers, that, we don't treat it as a loan, because I think legally those are two different concepts between what is a promissory note and what is a retail installment sales contract.
Yeah. John, and I hear what Nancy's saying. Are others say, I heard you say, it sounds like some other states do license dealers under some regime. Is that correct? Or is this going to be something brand new if it's a proposal?
So it really does vary, and it's very complex. Definitely a number of states have licensure for buy here, pay here dealers that are holding their own retail installment sales contracts. Some states, at least on their face, appear to perhaps also require licensure of dealers, even if they're going to subsequently sell those retail installment sales contracts, probably because some of them wind up not selling, some of them are with recourse, or some of them get assigned back to the dealer, things like that. But it's not always clear to what extent that licensure requirement is being enforced in different states. So it is a real quagmire, and especially, like I say, because some states have multiple different statutory licensure schemes under which the creditors can operate, and so it's hard to figure out, which one. From the consumer perspective, they don't know, but it's hard to figure out what even is applicable.
Chris?
Thank you. And thanks, John and Ben, for those presentations. To follow on Nancy's question, and Tony, your commissioner's question as well. I think, John, you're talking about other states that require a sales finance license of some type for folks to deal in this paper. I don't know of any other state that actually requires a dealer to be licensed to make direct loans under a lending license, like what's being discussed now. That's one item that seems like we would be a front runner here. The other thing is in the concerns I think that Ben was raising and that you've described, to me, focus on two key areas, which sound like steering and misrepresentation related areas. And there are already statutes in place in Maryland that I think we shouldn't lose sight of. In the transportation code in 15-312, there are already a long list of actions prohibited relating to vehicle sales, including not making any material misrepresentation in obtaining a vehicle sales contract, not committing any fraud, not preparing any or accepting any promissory note or other evidence of indebtedness, knowing that it requires the debtor to pay some other things. So I think that there are the kind of steering and misrepresentation things that I think are the concerns, at least are already mostly addressed in existing Maryland statutes. So I'm curious about what credit licensing for dealers in Maryland would actually accomplish when under the credit statutes that then would be elected. I don't know of a steering related provision that would apply and the misrepresentation related things that might apply in the credit statutes that would be elected are already covered in the transportation statute. So I'm curious about what this kind of effort would actually accomplish.
Okay. Ben, I'll recognize you if you want to talk, or John, to what Chris said. Number two, does the Department of Transportation, I mean, Chris cited the 15, way out of my area of expertise. Is there anybody who has responsibility over those things? Does anybody have an enforcement authority over that? So if you could answer that as well as, your point. Ben?
Thank you, Commissioner. And I want to thank both Nancy and Chris for those questions. I think that, I guess, starting with the Commissioner's question, I think that the transportation article requirements at this point, my understanding is that those are all under the MVA's regulatory authority. And so I guess that the idea here isn't to impose new requirements, and that seems to be where the other efforts at licensing have fallen down, is trying to impose new requirements on dealers. I think what we're talking about, or what I'm hoping we're talking about, is just including a requirement of licensing, so that just provides the commissioner with oversight over the financial part of the transaction. So whereas the MVA is focused on sales, the commissioner is, of course, focused on financing and credit. And so a license would simply require that the auto dealer open its books up to the commissioner, like any other creditor has to do in the state of Maryland. And as to Nancy's question about retail installment contracts versus loans, I think that's an excellent point. And in fact, in Maryland, for what are called retail installment contracts, there's a specific section of the law that talks about retail installment contracts. Licensing isn't required to originate those, and those aren't actually considered credit under Maryland law. That's part of the time price doctrine. But there are substantial consumer protections in the Retail Installment Sales Act, including the ability for the consumer to rescind the loan, which is something, and get back all of the payments that they've made on it for any violation of the statute. It's a very significant consumer protection that's not found in the installment loan provisions or the installment licensing provisions. And so while licensing isn't required for retail installment loans, licensing is currently required for loans that are originated under Title 11 of Subtitle 12 of the Commercial Law article, or the CLEC, the Credit Grantor Closed End Credit Provisions, which is what almost all vehicle loans elect CLEC. And so that is considered to be a loan under Maryland law. And in fact, under CLEC, a license is required to originate one of those. So this is just simply, the idea would be to simply clarify that vehicle dealers, like any other CLEC dealer, have to be licensed.
Yeah. And just to clarify, I just want to make sure that we're not conflating concepts and terms. Like, a loan is two-party paper, right? And a retail installment contract is generally considered three-party paper. And legally, they're distinct. So I don't want to call a retail installment sales contract is legally distinct from a loan, and they're not one and the same. So I just want to make sure that we are clear on that.
Yes, I agree. They're completely different, because there's the Retail Installment Sales Act, which defines what a retail installment sales contract is and exactly what can be in it and what can't be in it. And if there's any violation, then the whole loan is void.
Okay, Manuel.
So as to the benefits of this proposal for consumers, actually, Commissioner, I wanted to pick up on what you said, that when you look at the transportation article, that's outside of your bailiwick. It's outside of OFR's bailiwick. And people at the MVA are very fine people when it comes to investigating dealer-specific kinds of fraud. If they're Messing about with auto titles and things, great. But the MVA is not a regulator for credit products. It's not going to have the institutional knowledge, the familiarity with the wrongdoing that can be committed when you're talking about a credit product. And as Ben said, almost universally, these loans are being made as CLEC loans. That's what's elected. Often the intent is that a bank ends up with the loan. The reality is that doesn't always happen, and that leads to problems. And if something goes wrong, if there is an allegation of wrongdoing by the dealer, sometimes the response of the bank is simply to say, well, we wash our hands of it. Now you must deal with the dealership again. So the licensing, even without changing any substantive provision, would mean that OFR, which knows about credit and loans and CLEC, would be able to engage in regulation of those activities of dealerships.
Okay, Chris?
Thank you, Commissioner. Manny, thank you for that. I just wanted to weigh in and have us not lose sight about the FTC's holder rule, which these contracts have notices that make the assignor take on problems that the dealer created. And so when someone as a borrower has a problem with dealer conduct, they just don't pay the loan. And so that puts pressure on the person that took assignment of the contract to try to get something worked out. So I think that the lenders that ultimately are taking assignment of these contracts are ending up with the problems that any dealers cause. So just wanted to make that point as well.
Love it. Manny?
So just to respond to that, sure, legally, people may have a good holder rule claim, but we do have to think about the reality of these folks. If they don't pay on that note, even if they're right about what the dealership did wrong, what's going to happen? The lender is going to take their car away, and they're not going to be able to get to work. It's going to have a huge impact on their life. Ordinary people, not lawyers, who know about the holder rule and know what the obligations of dealerships are, they will just grin and bear it. They will put up with things because they do not know what their rights are. And if there is no regulator on the block who is looking at those specific issues, I think it is a disadvantage to the people of Maryland. Even if theoretically they could do what you say, they're doing it in practice is not so easy for them.
Yeah, sounds like, we have that same kind of clarification issue we were talking about before. Certainly from the consumer end, it is amazingly complicated. Ben?
Just 2 quick points. Thank you, Commissioner. First, on the holder rule, I think that the holder rule is an interesting point, but it doesn't take account of the situation where a contract doesn't get assigned to a lender, for example. And so we see this with yo-yo sales, where a consumer signs one contract with one interest rate. The dealer calls them back after they've taken the vehicle off the lot and says, "Oh, we couldn't get that contract at that interest rate, so you got to come back in and sign another one." Well, at that point, there's no holder rule to employ because the dealer still has the contract. The consumer is dealing with financing misconduct, and there's no regulator that they can go to. And the associated issue is something that John brought up, which is that not only can they not go to the commissioner, but they can't vindicate their own rights in court because all of these contracts have ironclad arbitration clauses. And so they can't go to court. And so they are left without anything. So there's no federal regulator now that's taking care of this. There's no state regulator that has authority over the financing, and they can't go to court. So they're kind of left with nothing. And that's a concern. Thank you.
Chris?
Thank you for that, Ben. I'm just wondering if we need more data before we can actually make a decision on this particular proposal in two areas. One, I don't think we really know yet whether other states have actually required licensing of auto dealers to make direct loans. I haven't heard that from anybody, and I think that would be helpful data to know whether we're sticking ourselves out there as the front runner. The other piece is it would be very, I think, beneficial for the group to hear from folks from, perhaps an auto dealer trade association who are familiar with the actual financing process from the dealer side, to hear their point of view. And I understood from my colleague Bob Enton that there may be folks from that one or more of those trade associations that joined on the call today. I don't know if any of those folks are present and want to comment, but I do think it'd be helpful to hear from someone like that and get more data about other state licensing before we put this to any kind of a consensus related vote. Just my thoughts.
Chris, I totally agree with your comments. I did not intend to put it up to a consensus discussion today. I hear what you're saying about the other states, and we can get information. I know we're running into a little bit of time pressure today. Kevin, I know you want to say something. John, I'm going to cut you off at this point because I think we've got enough. And I know I'll just ask you can nod if you continue to be a resource for us. We can reach out. Yeah, really appreciate that. Kevin?
Yeah, I would add, in addition to the additional data on other states that require the licensing, I think it would be helpful to understand, really clearly what we're solving for, like what gaps exist between the requirements under the retail installment sales contract and just broadly licensing all these dealers. I think there's over 1,000 of them in the state. I don't know what the capacity, Commissioner, of your office is to regulate that many businesses. I think that would be important to understand. And the other, viewpoint I would like to share as a lender that buys these retail installment sales contracts, somewhat anecdotally, I can tell you that the disclosure requirements that we have in the state of Maryland within these contracts is, from conversations I've had with my colleagues across the country, are amongst some of the most robust.
Oh, Kevin, thank you. Okay, so here's what I propose we do, and I'm going to throw Marceline.
Hey, thanks so much. Thanks for this very robust discussion. I appreciate it. I was just going to flag that I know, Commissioner, you're going to talk about next steps. I just wanted to flag that I do think this is a critically important issue, especially right now when we look at the reduction of oversight at the federal level, both with the FTC and the CFPB, of course, and the fact that consumer auto lending is skyrocketing. I do think that it's a critical issue for us to really wrap our heads around again and wrap our arms around, particularly because it was a recommendation that's already been made in Maryland a few years back under the first Trump administration. So just look forward to your thoughts on how we move forward, but wanted to flag that I think it's increasingly an important issue for us to address.
Yeah, thanks, Marceline. I agree. I know it was proposed, Ben mentioned, and I was a member of that commission. It came out with a recommendation in 19 and 20. If both efforts fail, so that is a little telling. I guess the question is, what kind of recommendation would we make that would, maybe get some traction this time? So what I propose to do is, while we're going to bring it up next meeting, it'll be first thing, I think, or right after. Hopefully we can solve this collection agency thing in a short amount of time, but I will come back to this. We'll try to get some more information. Maybe we can work with Ben to put a little idea on, what would be recommending exactly. I'm going to throw out for people to think about. Feel free to comment, offline or next week. Does registration address and help the same way that licensing would? Kevin raised the issue of resources. That's a fact. Our office has 98 people. If we were to take on 1,000 more licensees that required any type of examination, there's going to be a fiscal note associated with that because I have no office has no ability to take on that magnitude of work. So that's something else we need to think through. And yeah, I get the General Assembly has changed. I totally agree. And I don't think it should hold us back. I think the question is there a recommendation we can come to that is consensus? And if not consensus, maybe we put in some comments from folks that might disagree or however we go or we don't. So that's going to be next week. I know we have some hard stops. We're going to face in this session some litigation. And so Bob Enton's here. Bob, you spoke briefly last time about the third party litigation financing. Our office has not really had any complaints on this per se. We did take a case a while back, but the question is to talk about this bill and whether or not that's going to be licensing. So Bob, I'll give you the last few minutes. We're going to also see, I believe, some bills on probate and estate loans, which our office has received some complaints about. We may have to kick that over to the next meeting. And then in the next meeting, we want to talk about a new topic to add to the list of things we're talking about. So Bob, 5 minutes or so. I have a hard stop. I have to be on something else at noon. So
fine. Thank you very much. Thank you, Commissioner. My name is Bob Enton. I'm an attorney at the Gordon Feinblatt Law Firm. I represent a number of different groups and interests down in the General Assembly, including the American Property Casualty Insurers Association, which is a national trade association of property casualty insurers. Their members write about 60% of that kind of insurance for the state of Maryland. Around the country, we are now seeing legislation in many states to require the licensing of what are called third-party litigation financiers. These are companies that get a consumer, and in some cases a business as well, to enter into a contract that says that where this finance company will finance the cost of the litigation under an agreement with a rate of interest and everything else. And the only difference is here is that if there's no their ability to recover the money they loaned with the charges that go with it is dependent upon there being some type of recovery. They claim ardently that they are not lenders, that they do because their ability to recover the amount that they put forward is dependent upon some type of recovery. Frankly, to be blunt about it, I think that's total BS. I think they are lenders. Commissioner of Financial Regulation expelled one of them, entered into a consent order years ago to where one of these lenders agreed not to do business in the state of Maryland any longer. But the concern is that there is no specific statute which says that they should be licensed. The bill that's going to was introduced last year, didn't get through. We're coming back with it again this year. Would basically just simply require that they be licensed as lenders. I have a call coming up with the commissioner's office to talk about the legislation, I think on Monday. But I think there's a good chance we can get this passed. It's opposed by the Maryland Association for Justice, i.e. the Maryland Trial Lawyers Association, and by the National Trade Association that represents these folks. But we think it ought to be licensed. The state, in the state of Utah, which passed a bill, and I'll wrap up, Mr. Commissioner. They said that in 2020, the annual rate of return under these agreements was between 6.45%, and 797%, with a median of 59% and a mean of 91%. To say that these aren't loans is, I think, absurd. The rates of interest are off the chart, and we hope that your group will support the legislation. Thank you. Happy to
Okay.
answer any questions if there's time.
Well, I think, Bob, what we're going to do is let that percolate among the members. If we will have time, we'll be meeting again in February. So if the group wants to make a recommendation or anything, I don't know where everybody stands. I don't know that it would be appropriate to support, but we might be able to talk about what people think about that proposal then. I want to move to next meeting so that we can go. I know Melissa at our last meeting had suggested we turn to mortgage. So I'm going to suggest that in our next meeting, we include a mortgage topic now. We're starting to roll along with these things. That was one of the ones on our survey. Melissa, are you still on here? I see 13 others. Let me see. Or someone else. If you have thoughts on the licensing aspects, under the mortgage statutes, let us know. We'll get you on the agenda. We'll talk about how we structure that piece of the meeting. There you are.
That would be
Melissa?
great. Yeah,
Yeah.
that would be great. I'd love that. I'm just still getting used to the protocol in terms of, what I can talk about outside the group with members of the OFR and what they're looking for from me. I do have some strong feelings about the mortgage licensing law, and I'm just trying to figure out how best to present those without, pissing everybody off. So,
well, don't forget,
I'm
we're looking at suggestions that are for the benefit of the state and on the licensing piece. So that's kind of the broad game.
I'm more than happy to work on that.
Okay.
With Amy and Meredith between now and the next meeting.
Perfect. And if you, Ben put together some good resources. If you have anything for, your area, Marceline, if you've got something, or Chris, or, any members have some mortgage related topics that you think are worthy for the next meeting, let's get them into the hopper. We'll try to incorporate them into an agenda so we can get our thinking going. And if you have resources, let's get those so we can, time things out at the next meeting. I'm thinking next meeting, like I said, we quickly we'll have some stuff written on the collection agency. So that'll be good. Hopefully that's, not a super long, and I'll make sure it's not super long. So be prepared to, talk a little about that. We'll come back to the auto loan piece. Bob, maybe you'll be able to tell us a little more, or Amy will tell us where the licensing statute that you're talking about for third party fits in. We can talk about the probate finance, which I understand may or may not be a bill as well, and see if we can get that. And then we'll start our discussion on mortgage, which I think we'll kind of roll into. We also have another meeting in February, which I think that's going to be a robust discussion as well. Meredith?
We also have Nora Nichols from CPD who was going to offer her perspective.
Yeah, we're going to have to push.
I just wanted to. Okay. All right.
Okay. Which one was SB 985, Bob, the bill from last year? Is that Manuel's got a question in there?
Bob, you're muted.
Bob, you're on mute.
That was last year's bill. It was way too long. We have scaled it way down for introduction this year, and hopefully we'll get it through this year.
Okay, you know what? knowing that I believe we have a copy of that somewhere.
You have a copy of the draft bill. We sent it
No,
last
yeah,
week.
no, I'm talking about SB 985. We'll send that out so people can see what, what came prior. I'm sure we can get that, so we can provide that at a minimum to everybody.
If I could,
if we
Mr.
get-
Commissioner,
Yep.
I think you have the draft bill. We're going to talk about it Monday with you all.
Oh, yeah.
That might be a good thing to send out as well.
And Jason seems to have sent that in the chat. So there you go.
Okay,
Modern
great.
technology. All right. I want to thank everybody. I appreciate it. We're trying to move along at a little more pace. We're going to, we've got those two in February. We'll then talk about, another couple, I think, in March, so we can keep moving and have more time to this. So thank you so much, everybody. Appreciate your time.
Thank
I
you.
hope you have a good year and enjoy the next 90-day session.
Thank
Take
you.
care.
Thank you, Commissioner.
All right.
Thank you, everybody.
Bye-bye.